It looks like Binance is going to be bailing out a bankrupt company here in crypto, one that I know a lot of people had their assets on. I want to cover that along with some of the other big news. We have a lot of stocks falling here today. While the market's down, a decent amount, 1% on the NASDAQ or so, a lot of stocks have had a really rough last couple weeks, and they are near 6-month lows, 2-year lows, some on a price to earnings ratio or the lowest they've ever been. I want to cover that as well and go through a lot of other things that are happening in the market, including DCG and GBTC now announcing something that they may be selling off some of their holdings or doing a tender offer. We'll talk about that a little bit further in the video and look at what institutional investors are doing. So if you don't mind, hit the subscribe button underneath the video so you can see more videos like this in the future. I really appreciate that. Also, there is going to be a link down there to Margex. I've been talking a lot about how I think most people should take the majority of their crypto off exchanges or pretty much their entire long-term bag. But if you want to do trading, there's going to be a link to Margex underneath the video. There's also a link to moomoo. In case you want some free stocks, you can sign up with that link underneath the video and deposit some money on the platform to get a ton of free money. Now, Bitcoin and crypto in general, pretty much sideways over the last 24 hours. Not too much happening here. We had some excitement earlier in the weekend. A lot of these smaller, well, I'd say still top 100, but smaller cryptocurrencies further down the list were being sold off pretty significantly. I mean, we were looking at like 10% to 30% in a few hours. And that was because a lot of people were worried that DCG, Digital Currency Group, was selling some of their holdings. And we'll talk about them in a minute. But first, let's take a look at some of these stocks that are selling at like year lows or multi-year lows. We have Amazon at $85.20 here today, lower than it was a couple weeks ago. We have not seen this since COVID, and we just dipped down for a few days and then jumped right back to above where it is now. Tesla stock selling at the cheapest price on a forward PE that we've ever seen it, and selling for the cheapest price that we've seen since 2020. We were right around this mark, and we have a lot of support, it looks like, around here. Now, I did a video just to come out with it, just to be completely honest about it, yesterday, talking about how Tesla could explode because Elon Musk posted a poll saying that he was willing to basically let someone else take over Twitter. Now, I think that would be really good for Tesla over the next couple months if he does that. I should have probably gone into a little bit more detail. Of course, he still has to say that he's going to do that. He still has to find a new CEO. They still have to stop the bleeding at Twitter, because if they continue to lose money, it's not like he's going to stop selling Tesla shares. That's the main problem. The fact that he's selling a lot of Tesla shares and the fact that his attention is diverted. So I think that moving away from Twitter will help Tesla stock, maybe not right away, which I should have been a little bit more clear about. I did think we'd see a little bit more of a pump, though. We saw 3 or 4% this morning, and then once the market continued to, after the market opened for a little bit longer, we just sold that right off, and now we're negative for the day. So kind of a crazy turn of events that a lot of institutional investors were asking him to leave. He is now looking at leaving, and the stock continues to sell down. But I still think this is a great price, and honestly, I would like to see it sell off even longer. I talked about maybe last week how if there was a stock that you wanted to sell off and wouldn't be really affected by a sell-off, it would be Tesla, because they don't have a lot of debt. They barely have any, and they can pay it off pretty much. Well, they can pay it off right away, and you want a company that's in a good capital position, a good cash balance position. If they fall down in price, you want that kind of company to have that happen, because they won't have to dilute shareholders. They won't need to get bad debt at a high interest rate or anything like that. So I am actually excited that they continue to fall off, because I don't need to sell off my shares anytime soon. Now, this is still painful for a lot of retail investors, seeing cryptocurrencies down so much, seeing stocks down so much, and we're also seeing it just with everyone in America, not even people that are specifically trying to invest. When the Fed increases rates like this, it hurts everyone. You can see the monthly mortgage payment for a median priced U.S. home with 10% down and a 30-year mortgage has about doubled in the last 2 years, going from just about $1,200 to $2,400. Which is insane. And auto loans are also getting longer and longer. Here we have the 2022 share of loans in blue and then 2020 in black. And you can see so many more people, about 10% more people now are pushing for a 6-year or longer loan. So this is obviously just going to continue to keep people in a debt cycle. It's going to cause them to pay higher and higher amounts of interest, and interest rates are also going up too. So the interest rate is going up at the same time that they're paying longer for their cars. This wouldn't necessarily be as bad if they were getting 0% APRs. Also, with people in crypto, we're not just fighting the Fed. We're not just fighting them raising rates and asset prices falling down. We're also fighting some of the companies that are going down. So many people had their assets on platforms, and I know I had to move mine out pretty quickly a couple times this year, but they had their assets on platforms that went bankrupt. And now Binance.us is agreeing to buy Voyager's assets for $1.02 billion. Now, how I understand it is basically they're going to buy them. They're going to give back the crypto that was locked up on the platform for people, and then probably give it back on Binance US. I could always be wrong about that. They still have to get it approved by the bankruptcy courts, but I think this is really good news for anyone that's had assets stuck on Voyager. This is much safer, I think, than FTX buying them, and this was just announced today. So hopefully this gets pushed through. It's a couple weeks before we hear whether the bankruptcy court will allow this. They have a hearing on January 5, so we'll have to wait a little bit longer, but I think this is a step in the right direction, and hopefully people can get their assets off of Voyager. Another big fear of investors right now, even if they didn't have their assets locked up on a cryptocurrency platform, is that DCG goes and liquidates the Bitcoin trust. We've talked about Genesis a lot recently, but they just announced that they may have a tender offer, basically meaning that they may give a tender offer up to 20% of the outstanding shares of their $10.7 billion trust, which would make a direct appeal to shareholders to sell or tender their shares at a specific price during a certain time. This is if they don't get a spot ETF approved. I don't know exactly how this would go. I've never seen this, but I just don't know if they would go and sell all the Bitcoin then as soon as they offer this to shareholders. Basically, if you agree for them to buy it back, they sell off the Bitcoin related to that and then give you that cash proceeds, the cash proceeds of that. I'm not exactly sure if that's how it would go down, but I think they're basically just getting a lot of pressure from investors because they are at such a discount. They're at 49% on the Bitcoin ETF. They're over 60% on some of their other ETFs just because there's not a lot of interest in the space, not a lot of people buying. They would rather just hold it themselves. They don't want to pay the 2% fee annually. So I think they're just in a tough spot. They're still making a lot of money from the annual fee, but I would just be careful of this. Have some money on the sidelines, pay attention to it. I'll continue to give updates on this as well, because if they do sell 120,000 Bitcoin, obviously that would push down the market pretty drastically. Now, institutional investors are also a little bit worried right now of the market. You can see a lot of outflows this week compared to normal. We had about $30 million worth of outflows, 17.5 million coming out of Bitcoin, 9.1 coming out of Ethereum. Actually, some going into short Bitcoin, which I always take as actually a negative thing. So when you consider that, over 30 million coming out of crypto this week, which is the fourth week in a row that we've seen outflows. Now, they list a couple things as being the possible reason for this. Could be uncertainty surrounding businesses tied to FTX like Genesis and DCG. And they also talked about the hawkish rhetoric from the Fed with the Fed meeting last week. Now, I don't know how hawkish it really was. I think it was pretty realistic, basically just saying the same thing that they've said all along, which is we're going to continue to raise rates until we see sustained lowering in inflation where they think they can keep it at the target rate of 2%. So I think a lot of people just think that they're going to flip, and they haven't given that indication yet. Now, they have talked about maybe not increasing rates by as much soon, but we'll have to see where that goes in the future. Again, you can check out Margix if you're interested in that, or if you want some free stocks from moomoo, you can sell them off after you open up the account and deposit and then take your money back out. It's an easy, $20, $30 maybe. Let me know your thoughts on this underneath the video. Let me know if you're buying any assets or if you're worried about DCG selling off assets.